Let's bring in Rick Ducat, lead market technician here on the network, to help us break down some charts in an example trade. Rick, it's been a slog for Netflix, still positive on the year, but we've been in a downtrend for months and months.
As you said, underperforming the S&P 500 and its own communications sector here. But really, when we look at the other players in this streaming space, there's some pretty clear divergence here. Netflix is kind of in the middle of the pack, pretty close to Disney here, but Warner Brothers is obviously the giant question mark for this particular company. So we'll have to wait and see. I don't think the book will be closed on this one during 2025. We're pretty much out of time. So when we look at our candle chart, though, we can see downward sloping channel was the prevailing theme for quite a while here, but more recently a downside breakout has resulted in a consolidative phase all the way down here near about 94, 95 or so. So we've got our low point here near 92.71. You could argue that perhaps it's more of a descending triangle type shape here, or it's a channel. It kind of depends on how you look at these things. There's a bit of subjectivity involved here, but for the most part, we've been hanging on at this level around 92. We also had some notable highs and lows back here. You can see 82.83 or so was our double bottom with our green line. Then we had a series of high points before we saw a breakout to the upside at around 100. When we do look at our exponential moving averages that we follow, the faster ones are trending downward below the slower ones here. We are pretty much on par with our weekly EMA in blue. 21-day monthly EMA in teal comes in right around 97 versus 94 for our 5-day EMA. So those could be some other points to watch in the short term. RSI traveling upward out of the oversold area. Not seeing really any good bullish divergence or anything like that just yet, though, but still pretty low, still more of a bearish lean. Finally, volume profile, heavy volume right here at these lows near 95 suggests it's kind of a make or break point here.
Yep, and when you take a look at it, down 30% from those all-time highs that we had about 9 or 10 months ago. Example trade here using the option market. Rick, break it down for us.
Right, so as we said, kind of the make or break point here, the supportive level. So a neutral to bullish play, -1 February 20th, 90.85 put vertical at a 160 credit here. So kind of focusing on these areas here, this low point that we saw, 92, 92.50, 93, that's where the volume really starts to drop off. So basically just hoping we would stay above here for this risk-defined trade. Max profit 160, max loss 340, roughly 2 to 1 in terms of our risk to reward ratio in this case. Break even 88.40, roughly 5% to the downside versus the expected move of about 12.3% or so. Well within that break even, but as we said, we're at a significant potential turning point here. This inflection point could be a serious area to watch as we head into the new year.
Yeah, passive, higher probability, neutral to bullish, short put vertical. If you think over the next month and a half that we're going to see the stock remain above that 90 level and the break even at 88.40. Thanks to Rick Ducat.